Imagine waking up to find the price chart that you laughed at last month is now buying your morning coffee 5 times over. Crazy, right? Stick with me. So here's the scoop, right? And I've been dying to tell you, right? I'm talking about XRP, that one altcoin that everyone either calls a banker's dream or a crypto kind of purist's nightmare. Now, a few weeks back, it was kind of hanging around $2 and some change during and doing kind of what I guess the crypto equivalent of scrolling social media in pajamas would do. Then, of course, almost overnight, it shocked, or at least shook off, I guess, the slippers and actually sprinted past $2.60. And the wild part is the same setups that's kind of supercharged that 5-fold rocket last year just flashed green once again. Now that's why I've got my chart pulled up, my cold brew kind of sweating on the desk, and yes, my finger hovering over the buy button like it's a game show buzzer. First of all, full disclosure, none of this is financial advice. I'm not your dad, and my best friend still owes me $20 from pizza last night. So clearly, I'm no oracle. But what I am is a chart geek who gets goosebumps when the MACD histogram flips greener than a fresh spring of mint, right? And yes, I'm the kind of friend who texts you screenshots at 2 a.m. with kind of 5 crying, laughing emojis because the stochastic RSI just poked its head above 80 like a meerkat on a caffeine bender. Okay, so picture this. It's 11:47 p.m. and my apartment is lit only by the glow of TradingView. And I'm talking to myself because talking back makes it less creepy. And I say, this looks exactly like October 2024. Now back then, XRP chilled around 50 cents, and the market looked bored out of its mind, and well, most of crypto Twitter had moved on to whatever meme coin had promised them 3 Lambos. Right? Then, out of nowhere, the MACD flips. The stochastic RSI does that cute little crossover, and price slides out of that falling wedge like a kid bursting through the final bell on the last day of school. 2 months later, $3.30 per coin and more cheering than a Super Bowl bar. Fast forward to this month and deja vu slapped me so hard that I nearly spilled my cold brew on my keyboard. We've got the same falling wedge, the same histogram flip, the same RSI crossover. It is like the same kind of movie, or we're watching a sequel with, well, identical plot twists. And you're screaming at the characters, dude, we've literally been here before. Except this time, you're the character, and it's you that is hitting the buy and the sell, which are the plot twists. Now, before we kind of drown in candle porn, let me kind of break down what these indicators actually mean without sounding like a dusty old textbook, right? So let's think of the MACD histogram as the mood ring for momentum, right? When it flips green, it's basically saying, hey buddy, the bears finally snoozed and the bulls found a double shot espresso. The stochastic RSI, on the other hand, well, this is kind of the hype meter. Crossing above 80 is like gossip alert, right? Everyone's talking about this coin at the water cooler, right? When both shout party time together, historically, the confetti isn't far behind. But charts are only half of the gossip. I peeked at CoinGlass derivatives data, right? Imagine eavesdropping on the high rollers at the poker table, right? Funding rates turned positive and stayed there from May 1st. This isn't crazy high, right? But it's just that steady hum that you feel when a roller coaster starts its climb. So the translation here is quite simple. More people are betting long, but they're not doing it on margin higher than my kind of student loan interest rate, which is good, right? Because nothing kills a rally faster than retail piling on at 100x leverage like it's Black Friday at the margin store. Now, here's the spicy part. Analyst DJ, the dude whose chart circles have more social engagement than my last birthday post, points back to 2024. He basically says, kids, we've got the same signal combo. Last time, 5-fold gains. You can do the math. So let's do that quick napkin math, right? Current price is roughly at the point of recording $2.50. Right? Times 5 equals $12.50. Right? Now that's the difference between a kind of grande and a, latte that for most folks, I guess. But in percentage terms, right, we're talking about 400% upside. Suddenly your dusty hardware wallet looks like a potential vacation fund. So what's the catch then, right? Because there's always a catch. Now JD drops this pearl. 95% of traders get wrecked because they diamond hand the euphoric top. The translation, greeds, turns into hero into the horror movie extra. So he even kind of jokes about using Jim Cramer's mood as the kind of exit bell, right? If Cramer signs kind of bullish, laughables on the kind of national TV, well, maybe you should think about de-risking quicker than you can say inverse ETF. Okay, so here is where my own scars come in, right? In 2021, I ignored every sell order on a certain, canine themed coin because, well, what if it goes another 10x? Spoiler, it did the opposite. So that kind of scene where kind of Wally, Coyote realizes there's no ground underneath him, right? And that's why my portfolio, at least that was my portfolio at the time. So now I have a rule, right? I shave off a piece of the position every time price slices through the Fibonacci extension like a hot knife through butter. Is it perfect? No, but it beats kind of playing musical chairs with my rent money. Okay, let's loop back to today's XRP price. A falling wedge breakout is basically a coiled spring, right? Price chops downwards into a narrowing tunnel. Sellers get tired, buyers, gather in the parking lot revving engines. So when the upper trend line finally cracks, it's loud, right? And, that kind of breakout, or the last breakout, looked just like confetti cannon at New Year's Eve party, except instead of confetti, it was green candles. So this time might rhyme rather than kind of repeat line for line, but rhyme is really all we need. But dude, fundamentals. And I hear you, right? But let's get into this. Ripple's legal overhang, it still exists, right? New ODL corridors keep opening. Corporate treasuries are sniffing around tokenization. That's the macro marinade, right? Now we're here for the sizzle of the charts kind of throw off. Combine both though, and you've kind of got steak night with garlic butter. Okay, so here's how I am personally approaching this. Step one, right? You pick an entry zone, usually a kind of back test of the breakout line, or use a fibs, 38.2% retracement, whatever kind of shows up first. Step two, right? Size like a kind of responsible adult. Translation, no more than the amount that you'd be okay losing, without ugly crying on camera. I promise I won't do it. Step three, right? Set staggered targets, right? Starting at previous local highs, scaling out as we kind of close weekly candles above each number. And yes, right, it's slower than betting the farm, but slow and steady keeps your blood pressure in the okay, let's talk range. And by the way, if you want to have all the banter about targets, stop loss ideas, or which comedian best impersonates Gary Gensler, hop into our free crypto Discord server via the link that's in the description, right? It's a study group, except we replace highlighters with GIFs of rocket ships, and occasionally someone's cat kind of photo bombs a screen share. Oh, and talking about tools, if you're hunting for a fresh exchange with lower fees than a thrift store clearance rack, check out Bloating through the link that's in the description down below. I made an account, threw in a small snack, and let me just say that their order execution feels smoother than buttered lightning, right? Plus, extra sign-up perks never hurt when the market's handing out volatility like candy on Halloween. But here's the tension point then, right? Every technical twin has, well, an evil twin, right? Now, a false breakout loves to kind of sucker punch optimism. So if you get that candle that kind of screams freedom, then boom, price trips over the 21 EMA like it's black ice. Guardrails, number one, volume confirmation, right? On the 3-day kind of chart, right? I want to see volume bars taller than my morning hair. Number 2, keep an eye on the funding rates, right? If they spike, it means that everyone's FOMOing in with leverage, and overcrowded trades collapse faster than a lawn chair at a family barbecue. And speaking of leverage, let me tell you about my friend Marco. Last cycle, Marco levered up at 50x right when Bitcoin lost a critical support. He turned what could have been $500 loss into a $5,000 facepalm. Now he uses 1x spot buys only, and he stresses stress winkles have actually kind of reserved or reversed a little bit here, right? The point being that trade the trend, don't marry it, and maybe send the leverage monster on a very long vacation. Now it's stats time, but in plain English. The MACD flipping green shows the short-term moving average is rising faster than the long-term one. That's momentum acceleration. The stochastic RSI crossing above 80 shows price closed near the top of its range or recent range. Now together, they're a tag team yelling momentum plus position. Let's go. Now, historically, these two line up on a higher time frames, or at least when they are on the higher time frames, the daily, the 3-day, the weekly, they kind of signal bigger moves because they're filtered out kind of the jazz hands of the intraday noise. Now, you can go ahead and back test it yourself. From December 2024 to February 2025, XRP's MACD flipped, plus stochastic RSI crossed, precede kind of a 560% run. Before that, in summer 2023, the same combo triggered a 3x rally. Is it guaranteed? No, of course not. But when my car's GPS, traffic app, and radio all tell me that the same route is clear, I'm more confident in hitting the gas. So let's talk emotional cycle, right? Markets move like teenagers. First, they get moody, that's the anger. Then nostalgic, that's hope. Then euphoric, right? Selfie at the top. Then grounded, right? That's capitulation. Now, we might be tiptoeing into optimization or optimism right now, right? The trick is selling some candy floss before the roller coaster actually ends. Now, JD's rule of thumb here: when mainstream media pumps you full of hopium, prepare parachutes. Cramer's fist bump becomes your caution flag. It's kind of like when your latest tech-savvy relative suddenly asks if they should buy. That's usually Act 3, right? Scene 1 of the drama. Now, one more thing. Derivatives open interest climbed, but funding stayed under 0.015%, that is. Now, that's like everyone lining up at a buffet, but refusing to overfill the plate. It's a good sign, right? It means leverage, at least leveraged apes, haven't actually swarmed in yet. Now there's runway left before the actual exit doors get too crowded. Maybe you're overthinking and, okay, storyteller, paint me 2 futures. Sure. Scenario 1, XRP backtests the wedge breakout at around $2.30. Finds support, volume spikes, MACD bars get longer than a TikTok scroll, and we step up, $3, $4.50, psychological $5, then $7.50. Maybe that juicy $12.50 within a couple of months if the stars, regulators, and whales align. You trim some each milestone, right? Toast small wins and tweet your cat's reaction gif. Scenario 2, right? The market slaps on plot twist, maybe a surprise SEC headline or a macro wobble, price nukes back into the wedge, invalidates the breakout, MACD turns redder than a tomato in July. And that's where stop loss discipline saves the day, right? Take it on the chin, regroup, wait for the next setup. Momentum doesn't ghost you forever, it texts you. You up yet? And at that moment, most random times. Either way, your over-preparing beats over-leveraging, right? Set alerts, plan exits, and please, for the love of your keyboard, don't chase green candles with rent money. Now, before we wrap up, let me land a personal reflection here, right? Crypto for me, it isn't just lines and numbers, it's a mirror of my own psychology, right? When that MACD flips green, it's not just momentum, it's my ambition lighting up, right? When the stochastic RSI crosses 80, that FOMO tingle is basically my inner kid screaming. Let's ride the bike down the hill with no hands. And Chris will tell you how that's fared for me in the past. Now, the trick is pretending that kid or parenting that kid, right? To kind of cheer the excitement, but also to make him wear a helmet when he goes down that hill. Okay, so here's the roadmap kind of taped to my monitor, right? If we close a 3-day candle above $3 with volume expanding, I'll bump my stop losses up to break even. If we hit $5, I'm cashing out 25% to cover the initial capital plus a celebratory pizza night. Yes, Marco still has to pay his share. I'm not doing that again. And of course, if we slide below $2.10 again, I'm out. No questions. Protect the capital first. It's simple, sure. Boring, maybe. Effective, historically, very. Now, remember, right? You're allowed to take profits. Diamond hands are shiny only until they kind of break fingers. And if you want more of these kind of trade journaling scenarios in real time, seriously, slide into the free Discord server via the link that's in the description down below. We post charts, we memes, we put out the occasional midnight MACD just flipped panic dance, but also give Blowfin a whirl if you need a playground with a slick UI and low fees, right? The sign up link is waiting for you in the description down below, ready to hand you the new exchange kind of honeymoon phase.